I spend probably an hour a day talking to different borrowers just about the path to homeownership. I do a lot of one-on-one consultations of where people are and how to get to the next level. So I say the same thing time and time again. I thought it would be much more useful for you guys and everyone else if I just did a video on it. What are the key things a lender's looking for and how do you get to the next step? So today we're going to talk about the path of home ownership. This will be a little bit longer of a video, so I apologize in advance. I may have to take breaks. I could pass out, but we're going to do this, okay? Because I know that this will help you. It will. Number one. So whenever I'm on the phone with someone, the first question I'm asking is, okay, how's your credit score? And the reason I'm asking that is because that really tells me, it's like the biggest indicator on the path to home ownership. Because if someone says 550, 540, 400, I don't have credit, then they're not on that path yet. They're here, they're in the waiting gate. So we've got to get them to a point where they can start trotting towards buying a home. Because if your credit score is under 620, if you have really bad credit and you haven't put the work in to fix it yet, we can't do anything. It's that simple. It doesn't matter if, because a lot of times I'll hear, well, my ex-husband did this. It's your credit, guys. You gotta clean it up. You gotta clean it up. It sucks. Like, I've cleaned up my credit. It is not fun. It is not glamorous. To really do a good job, sometimes you totally have to take a hit to your quality of life, but it is necessary and you need credit your entire life, okay? I know there's a big financial advisor out there that tells people, credit's the enemy, you don't need any. Well, guess what? He's so rich that he doesn't have to get a mortgage for his house. He's so rich, he can buy any car with cash. He's so rich, he doesn't need credit. But the rest of America, well, from what I'm seeing, everyone's not that rich and we need credit so that we can buy the stuff that we need to survive, like a house, like a car, the list goes on and on. So credit is not the enemy. The enemy is improper usage of credit. That is the enemy. Buying stuff you can't afford, maxing out credit cards, not paying your bills. That's the one that always gets me. Guys, we live in modern times here. Set up auto pay. There is no excuse to be late on credit card payments or debt payments when auto pay exists. It takes 6 minutes to set up. So if you say to a lender, I got really busy, that's why I didn't make the payment. We can't be like, oh, no worries, we can't erase it. We don't control the credit bureaus. Our underwriters can't look past what the credit bureaus are reporting. And if the credit bureaus are reporting that you're late all the time, well, as a mortgage lender, we're like, shoot, are you gonna pay us on time? And if you say, I was so busy, I forgot to pay them, but I paid it off. Well, I don't want you getting so busy you don't pay us. It doesn't work. So you wanna make sure you pay your bills on time, you don't max out your credit cards. You don't need 20 credit cards. That's my other thing that I always see where I'm like, why are there 20 credit cards? And I get it. You walk into the store and they're like, oh, get 20% off if you get a credit card. Hey, miss, can I get you a credit card? I mean, guys, it's a scam. It's a scam. If you look at any of those department store credit cards, the interest rate's like 24%, and that's with good credit. And to save that 10% off of whatever you're buying or 20% off of whatever you're buying, it is not worth it. It's not worth it because especially with those cards, it's really easy to forget you even have them. So people don't make payments for that. So 3 credit cards, max. You really do not need more. 3, just 3, okay? So you wanna make sure that if your credit score is below 620, you work on it. If your credit score is between 620 and 700, I'm usually looking at it going, okay, what can you fix? And the reason I'm doing that is because the interest rate that I can offer you as a lender is better if your credit is higher. It's that simple. What I can offer you, it's like going into a restaurant with $5 versus $1,000. What can you buy? Same thing with interest rates. If you have really strong credit, you are gonna get the lowest interest rate I can offer you. If you have really low credit, you're gonna get an interest rate that's not gonna be as great. The only exception to this is VA loans. With VA loans, we give amazing rates regardless of credit score because that is how the VA administration has set it up. And we have stayed true to that. Do all lenders stay true to that? No, they don't. There's a ton of lenders telling veterans right now that their credit score is so low it's gonna cost them $1 million. That is, Conventional loans, it's true. Veteran loans, it's not, okay? So if your credit score is super low, before you talk to a lender, before you have a lender pull your credit, don't go online and apply and hope and pray that your 540 credit score a lender will see and make an exception. They can't. They really can't. That's the thing. We don't have the ability to make exceptions. We have guidelines, we have rules, and we're not, it's not 20 years ago where you could be like, but here's all the good stuff, and they could make independent decisions. This is a huge business where Fannie Mae and Freddie Mac are setting the rules to the large extent on what they will and will not accept. Even Ginnie Mae. So VA loans, we're not doing anything below 620. We're not. And there might be a lender who's saying they're not doing stuff below 660. I know there's some that's saying they're not doing stuff below 680. But the basic rule of thumb is your credit score needs to be over 620 to get a loan. If you're looking for a jumbo loan, so let's say $1 million loan, your credit needs to be a lot higher than that. So most important thing, credit score. And then I have gotten comments where people are like, this is so impossible. It's not. It's really not impossible to clean up your credit. I've seen so many people do it. I've done it myself. Please stay away from debt negotiation companies. It never works out well. It just takes a lot of work and a hit to your quality of life so that you can get in control. But once you're in control, guys, and once you have good credit, it's magical. It's so magical. I mean, I've been both places, and I have to tell you that, filling out an app for anything and being like, yes, it's 760 or it's 800. It's amazing. It's way better than, 20 years ago where I was applying for a job and I was like, my credit's not good. Like, I get it. It sucks. So put in the work, fix the score. There's tons of free resources out there. Now, what if you don't have credit? You have no credit. Okay. So we run into that on occasion. And there's one loan we can do with that, but it always requires a 12-month rental history. And what I generally find is the people who don't have a credit score, they also don't have a 12-month rental history, or they pay in cash, or it's something I can't document. So it's really important. I tell every person who calls me, build your credit. Build your credit. It will reward you for the rest of your life. It will. It will reward you for the rest of your life. It is worth the effort. It is worth the pain. It is worth the headache, because it will pay off over the long run. Most important thing. Okay, so the next thing I always talk about is job. So I do get a lot of calls from people just out of high school, and you guys are awesome. I love that you're thinking about real estate so early. Like it just gives me so much hope for what we have coming down the pipeline with the next generation. And the key thing there is that you guys need to have an employment history of 2 years. It doesn't have to be the same job. You just have to have had a job for at least 2 years. So, maybe you started off at a restaurant and now you work at an office, but it's been 2 years. Well, then I can use it as long as I can show consistency in income. So if you just got out of high school and you just got your first job, I can't do anything until you have a 2-year employment history. If you worked part-time during high school, I can tie it together. But that's if you're getting a consistent 40 hours and everything else. So just know we do need a 2-year history. Now, this also applies to people who maybe, let's say that you took 10 years off because you had kids or something else and you just went back to work and you've only been there a month. We've got to have a longer history. So it's really important that you know that 2-year rule does exist. There are exceptions to it. So let's say that you just finished nursing school and you're a nurse. I can use that almost immediate as long as it's not part-time income. Same with doctors, police officers, firefighters. If you just got out of the academy and you're starting, we can use that. So as a baseline, that's something to talk to a lender about for sure. If your credit score is 540, there's nothing we can do, guys. You gotta fix it. And I have to say that lenders who are giving out a ton of credit advice, like, be afraid. We're not credit experts. I don't even, at this point in my career, I don't even try because it's impossible to gauge. So I just say, hey, if you want to talk to someone, I like this guy, call him. He does a free consult. And I do that because credit is so specific and it is so easy to screw up. And I have had people call me and be like, this lender told me to do this and my score went down 100 points. And I'm like, oh yeah, they didn't know what they were doing. Sorry, I have breakfast on me. Okay, so let's go to the next thing. So we did credit, we did income, assets. Yes, assets are so important. You need some. Yeah, I mean, here's the thing. If you call me and you're like, I've got a 680 credit score, I've got, 2 years at my job, I have $0 saved, and I want a $500,000 house, My reaction is usually going to be, you need to start saving. Yeah, I mean, if you're a veteran, we can try to pull it off because of the zero down VA loans. And we'd have to get the seller to pay closing costs. We can do that. But unless you're a veteran or active duty or qualify for a VA loan, 100% financing is really hard to find right now. Like really hard. And it doesn't always put you in the best position. And you don't have to have 20%. So I don't want you guys to feel like I'm saying that. I mean, you do if it's jumbo, but if it's not jumbo, you don't have to have 20%. But if you're trying to buy a $500,000 house and you don't qualify for a VA loan and you have $0 in your bank account, guys, you got to do some saving first. So $500,000 house, I would say that you need to save at least $20,000, right? Because if I do a 3% or a 3.5% down program, I still need closing costs. And I still want to make sure that after the house closes, if the water heater breaks, you're not in financial trouble. And I know that's frustrating because people are like, but my lease is up next month. Cool, you should have started saving last year. I mean, that's the problem. Like, I get that we're in a culture of instant gratification, but sometimes instant gratification is deadly. We saw that in 2006, 7, and 8. Look what it did to the housing market. Anyone could have anything they wanted, and there was no consequence, but then there was consequence. People lost their houses. They were financially devastated, and it was because no one sat down with them and said, hey, this is what you're getting into. This is what you should do. Okay? And that's what I do a lot of is, hey, look, I know you're going to hate what I say, but this is what you should do. And it's because I see both sides. I see people who put in the work to try to get themselves in the best position. And then I hear the stories of like, well, this lender said, and the people who put in the work have such better experiences. And that's the thing about owning a house. It should be a good experience. I always say it should be a benefit, not a burden. And sometimes you got to put in work to get there. So I hope this has been helpful. If you have any questions, comments, feel free to reach out. But those are the big things that I am constantly seeing and constantly looking out for. Thanks.